Hi, my name is Kent Wolf. I'm with the Center for Agribusiness and Economic Development at the University of Georgia, and we've been working on the gate proposal, the gate tax situation for the last couple of years. We were contacted by the Georgia Agribusiness Council and Georgia Farm Bureau to look into the implications of the gate card and its potential for impacting county sales taxes. And with that, I'd like to turn it over to Ms. Sharon Kane.
There were several tax changes that went into effect in 2013, and we wanted to take a look at them and see how they affected Georgia counties. First of all, there was the GATE, the Georgia Ag Tax Exemption, and then there was the title ad valorem taxes. And what we did is took a look at some Department of Revenue data to see what kind of changes it made to Georgia counties. This report from the Department of Revenue shows how all the categories except for car and automotive went up and down in various amounts, but primarily the car and automotive sector sales tax revenues went dramatically down following the implementation of the new TAVT tax in fiscal year 2013. This is the same information in a line graph form that shows the circled area shows car and automotive businesses and how they receive sales tax distributions. You can see there's a dramatic drop in the car and automotive sector during the time frame of 2010 to 2014, where most of the other sectors remained pretty much the same. Taking a look at the period before the tax was implemented and after shows us in these pie charts how before the tax, the car and automotive sector represented about 10% of the total sales tax distributions back to counties, and then afterwards about 4%. You can see this in the red slice of the pie. This graphic shows a map of the percent change in total sales tax distributions before and after the tax, and if you'll notice that the red means losses and the green means gains, and you can see overall the total sales tax distributions decreased before and after the tax, with the average Georgia county experiencing a loss of nearly 7%. However, you can see in this graphic that once we remove the car and automotive sector sales tax distributions, many of the counties no longer experience losses. In fact, the average Georgia county now shows an increase of just under 1%, and only 62 of the counties now experience a decrease in distributions. And you can see with this graphic that there's a lot more green, which means more counties are in the positive. This is because when we add back in the title ad valorem tax distributions with data from the Department of Revenue, we can see that now the average Georgia county is no longer experiencing losses but gains of nearly 6%. There's many factors that could affect whether or not a county has gains or losses in sales tax distributions. One of the things that could be considered is the percent change in average earnings per job. For example, we have figures from the Bureau of Economic Analysis that shows in 2013 to 2014, only 27% of Georgia counties showed a negative change in average earnings per job. Based on tax revisions that went into effect in 2013, we took a look at Georgia counties and how they were affected. Based on Department of Revenue data about distributions back to counties, we saw that many counties experienced losses in sales tax distributions following the tax. However, once we accounted for the title ad valorem tax being distributed back to counties, we found that much fewer counties experienced losses as a result of the changes. There really is inconclusive data about the exact cause. We know that there's many changes, national, regional, state, and local, that can have effect in counties.